Hey, it's Chad Lubin, Cross Country Mortgage. I hope you're having a fantastic week. I hope your home search is going well. Gosh, just a lot of exciting news out there that seems to be returning to a more normalized market. And that's good for you, the buyer. There's a better chance that there's not going to be so much competition on property. And people take a slowdown as we're going backwards. That is not the case. We are seeing the market normalize. We believe we're returning to a 2 to 3% a year appreciation. Listen, housing has increased by 40% over the last 2 years. That growth is not sustainable. Do I personally think we're going to go backwards? No, I do not. And here's why. I always want to support what I say with data and with facts. So I have talked about this several times. Sorry if you've watched another video, but just a lot of misinformation in the media out there. And some of it is just looking at improper data. The media reports 1.7 million housing starts this year, right? There's about 100,000 homes per year that are destroyed, storms, fires, tear downs, right? That leaves the supply with 1.6 million. Now, households being formed. What are households being formed? That is a divorce. That is somebody leaving their parents' house and starting a new household. Sometimes that's two young people or even older people getting married and forming a new home, and maybe they lived with somebody else. That's household formations, right? And that's 1.4 million currently, which is above average. So it looks like there's a 200,000 home surplus, and that's what the media is reporting. But where they're flawed is not all of these homes permits for new houses of 1.7 million are finishing the same year, right? Actually, what's getting finished is about 1.3 million homes, and there's another 100,000 still torn down. So our actual supply is 1.2 million, and we have households needed of 1.4 million. So that's a 200,000 household shortage. Right now, as the new numbers just came in, I'll update this PowerPoint. It's actually down to about 130,000. So yes, the deficit is decreasing, but there's not a massive surplus in houses out there, and builders are starting to slow down. People think that's negative for housing. That's good for appreciation. We don't want the supply to go high. That's when there's more supply in houses than demand, where we will see prices go backwards, and the builders are slowing down building, which will help keep that supply within line. So I do not personally see housing going backwards. Will we see a normalization? Yes. Will we see the home values not go up so rapidly? Yes, but I do not think we're going backwards. I think it's a great time to buy and stay the course and work hard to get under contract. Lastly, interest rates are really unchanged week over week. So we're starting to see the interest rate markets normalize. Right now, there's a big Fed meeting, and they will likely increase the prime rate another 0.75%. The media will, of course, get this wrong and say all interest rates are going up. Listen, this has already been priced in. If they only cut, so what's priced in is a 0.75% prime rate increase. Remember, mortgage rates aren't tied to the prime rate. This has already been priced in. So the expectations by market traders are that the Fed is going to cut 0.75%. What will move the markets is there's a surprise in either direction. And I know this is counterintuitive, but if the Federal Reserve Board gets really aggressive and cuts, let's say 100 points, or instead of 0.75%, 1 full percent, I believe the markets will actually like that. That is a sign that they're serious of getting inflation under control. If they don't cut as much and only cut 0.5%, the markets will receive that information as, oh my gosh, this inflation is going to continue, and the Fed isn't serious about getting it under control. And you'll actually see mortgage bonds and the stock market not perform as well from it. Some stocks might in the growth sector, right? So I know that's hard to understand. Know that we're here to navigate this. If you look at current interest rates, week over week, you'll notice relatively unchanged. And there's been a little bit of movement, but really back to June 30th. So almost all of July, we've had normalized interest rates and they're trading in this tight range, right? So, gosh, stay the course. No, you are marrying the home. You're dating the interest rate. I believe we'll be refinancing in the election year of 2024. I believe they'll crash the economy by raising interest rates. And when I say crash the economy, that's a little extreme. I mean, they're going to pull it back. It's already started to happen. And then once it's pulled back and contained, they'll stimulate again. It's a game that the Federal Reserve Board and our government have been playing since 2007. And like it or not, it's worked really well, right? So I believe it will work well again. I believe when they need to stimulate growth, they'll buy mortgage bonds, they meaning the government and the Federal Reserve. That will make interest rates go back down. I think the current administration will want to position themselves well in 2024. So that's my thoughts. That's what I think is happening. Know that you're marrying the home and you're dating the interest rate. And if you work with us, within the first year, if rates drop 0.25%, I'll waive all of my costs to refinance you. So you'll just pay limited costs for your title, for your appraisal, and the county recording fees. I'll waive my costs. I don't need to make money off you twice in 1 year. So that's who we are. That's what we'll do. We're watching these things closely. We're honored to be working with you on your home search. Give us a call if we can run any numbers for you. That's 312-731-4939. Make us aware if you're putting in an offer so I can call the listing agent, the realtor on the other side, and pitch how great a buyer you are, pitch how great your realtor is, pitch how great we are, and that we're the best team to sell their home to. I get a ton of feedback that many times that's the thing that gets us, our team, the property over another realtor, lender, and buyer. So let me help you. And I'm honored to be on this journey with you and know we're on this path with you no matter how long it takes. The best thing you can do to create wealth is purchase a primary home about 3 times your annual income. Call me with any questions, 312-731-4939.